As US President Donald Trump said the Federal Reserve had gone crazy with plans for higher interest rates. That's a direct quote. Shanghai plummeted nearly 5%, while Tokyo and Hong Kong both shed around 4%, as investors fretted about surging interest rates and the ongoing US-China trade war. Hong Kong's Hang Seng plummeted 3.7% to 25,218, while the Shanghai Composite Index dropped 4.9% to 2,593. Tokyo's Nikkei lost 3.9% to close at 22,590 points. US stocks were hammered on Wednesday, with the S&P 500 marking its biggest daily decline since February 8. Technology stocks led the losses as rising US Treasury yields sent investors fleeing from risky assets. The Dow Jones Industrial Average fell 3.15% to 25,598, while the S&P 500 lost over 3% to 2,785. The tech-heavy Nasdaq Composite dropped 4% to 7,422 points. For more on the markets, we cross to Arabile Gumede. He's standing at the Johannesburg Stock Exchange. Arabile, not doing so well in our markets either.
Yeah, certainly not, Nzinga. It's red across the board, certainly with only the gold miners really feeling some sort of reprieve from what has been a complete damper, more than 2% loss thus far. And as you said, it's only nearly 1:30 really on that front. So a lot really happening. The rand still at around 14 rand 60 odd against the US dollar, so a whole lot of that. The oil price has, however, come back ever so slightly to around $81 a barrel. But we'll unpack all of that and even your manufacturing numbers, which seem to have beat estimates as well. All that and more coming up in a bit, but let's take a look at your European and local markets. Chantal Marks from FNB Wealth and Investment joining me now as we unpack this market picture. Chantal, Michael Jackson has that song saying blood on the dance floor. This looks like just blood on the trading floor here too.
Yeah, and I dressed in red in sympathy with the market. No, it's looking pretty hairy across all kind of geographies. We saw a really negative day in Asia. We saw some pronounced weakness in the US, particularly among tech stocks. It's no wonder that we're also trading in the red. Naspers, of course, also contributing quite a bulk of why we're seeing so much weakness in our market. That share down again over 2% today on the back of further falls in Tencent in China.
What exactly is the reason for the downfall? I suppose that is the big question. One, when we go down, or if an emerging market goes down, you say risk off.
Yeah.
But the US is also down. Asia is also down.
So this is just a more broader risk-off scenario. So usually when it comes to risk-off sentiment, it'll just be movement away from emerging markets, out of commodities, that kind of story. But you will see gains in developed markets. In a real true risk-off environment, you are going to see money flow away from all risky assets. That includes equities globally. It includes bonds globally, and you will see money move into safe haven assets like gold or US dollar cash.
So where to then? Where do you look for value in this market? Where do you go to and say to yourselves, look, we're down for the year anyway on the JSE All Share. We're probably at the worst levels we've had for 2018. The likes of Naspers had levels they haven't been at in over a year and a half. Where then do you turn to in this market?
Yeah, so I mean, this is a good time that if you do have a long time horizon, so let's say 3, 5, 7 years, you can start looking at accumulating stocks at decent levels that are really high quality companies that have proven themselves throughout ups and downs, throughout the global financial crisis, throughout the I think it was Black Friday in 1987. A lot of these companies have been around a really long time, and they actually do look like decent value. So in South Africa, if you are feeling brave, you can start accumulating SA Inc. shares, perhaps start looking at your Naspers shares, and But beware, you might still see some weakness because we don't know how long this risk-off scenario will continue. Even in the US, it's very difficult to predict when it'll come to an end, and we can only hope that solid corporate earnings there, with third quarter earnings season kicking off today and tomorrow, might give a boost to global markets.
Yeah, it is the worst downfall in Donald Trump's era as well as president. So for that market to have really been going down is quite a big deal on that front. If you take a look at the rand, 14 rand 61. It's pretty much stable despite the onslaught that's really happened to the rest of the market. No real sentiments around there?
Yeah, I mean, the rand steadied after the announcement of the new finance minister being Mr. Tito Mboweni. I think a lot of speculation around that, a lot of uncertainty surrounded that decision, the decision for Nene to go in the first place, and then, of course, the decision on who to hire. I think the market's kind of settled on that for now. I think the dollar isn't particularly strong at the moment, so perhaps that also has an influence on the rand remaining quite steady. But relative to yesterday at the same time, the rand is slightly stronger. Yeah,
quite an interesting facet on that market point there. Let's talk about some other economic data having come out now, or maybe if we continue actually with equity data, we can talk about Mondi. Yes. They had a set of results out actually. Yeah, and poor Mondi was down 7% yesterday on something that had absolutely nothing to do with them. But today coming out with a really solid third quarter trading update, guiding for EBITDA to be up by 30%, and revenue also up quite solidly. They didn't give a specific number for revenue, but they did cite that they saw both volume and pricing increases. The market was looking for 17% EBITDA growth for the full year, which meant a continuation of what we saw in the first half. And if you look at the different divisions, it was only consumer packaging, which is basically the packaging for perfume bottles and kind of high-end stuff, that didn't do particularly well. But the rest of their divisions did exceptionally well. People shopping online, Mondi's in the money. But sadly not on the JSE, down 2.42%, but it continues with the rout across the board. Economic news very quickly. Manufacturing data, that's coming out at around 1.3%, even beating estimates. So that's quite positive.
Yeah, the market was looking for a small rebound. This rebound was bigger than expected. We only looked at it very briefly, but it seemed as if it was based around ferrous and base metals, so steel manufacturing, and then also clothing and footwear and textiles, which is very positive because clothing, footwear and textiles is kind of a unloved industry in South Africa where we actually do have a competitive advantage. So growth in that industry would be quite positive. On the negative side, everything else seems to have still come under quite a bit of pressure, and the manufacturing sector is definitely not out of the woods yet.
Yeah, certainly some points to watch out there for manufacturing production increasing by 1.3%, food and beverages contributing 0.9 of a percentage point there to the total increase there too. So some interesting facets happening across the markets as we've noted. That's where the buck stops, but we do have, of course, your foreign direct investment flow is what I'll be talking to you about right after this short break, and what exactly the JSE has been doing when it comes to net sellers and net buyers from foreigners when it comes to these stocks. So all that and more coming up just after this. Do stay tuned.